Welcome everybody to the 40 Finance channel. My name's Jeff Beers and today I'm looking at Roku stock. Is Roku a good investment here in the year 2020? Let's dig in. But don't forget, if you like stock analysis, investment ideas, and personal finance videos, then make sure to subscribe to the 40 Finance channel. Okay, Roku stock today sits at $130. It's had a 52-week range between $51 and $176. So quite the roller coaster ride for a 12-month span, and that definitely demonstrates, some instability in profit numbers as well as just being a growth stock. The bull case speculation for Roku is that it could eventually be the software behind every television set, mobile app, anything that wants to connect to traditional streaming services. They're sort of the Switzerland of streaming providers in the sense that you can access all the different streaming providers as well as some great bonus free channels through your Roku software, stick, TV, you name it. Now, Roku hasn't turned a profit yet, so there's no PE, forwards, backwards, sideways, anywhere on this one. They have invested the majority of their revenue back into growing, which is a great strategy. The question, of course, is when do profits eventually appear, and what matters the most for investors? Now, without a PE, you have to do a couple alternative methods to try to value Roku stock. For my analysis, I'm going to use the price to book ratio, okay? And the price to book ratio is the one that I'm comfortable with, but there's other ways to do this as well. But it's basically the stock price divided by the liquidation value of Roku, which is all of their, cash, assets, intellectual property. Now, liquidation value is an estimate by analysts that they pull from Roku's financials, but it gives us at least some sort of valuation that we can look at. And you see here, since all the quarters back to June 30th of 2018, we can see that slowly but surely over time, Roku's price to book ratio has went up, and it currently sits at 35.40, okay? I can tell you from experience that 35.40 is a pretty high price to book. So when I look at the stock solely on that metric, I see that right now Roku is more expensive per share than it was even back in September of 2019 when the price to book was at $25.94. So if I'm an investor and I'm interested in Roku, I would say that right now is probably not the best time to jump out and buy at $130 a share. We need to wait for either two things to happen. So one thing that we probably want to see if Roku is indeed expensive is we need to see the price to go down from the 130 it stands out today. We want to lower that price to book ratio or whatever, valuation metric you're using. In this case, I would say that I'm not super interested until price to book gets down closer to where it was in September at $25.94. Now, the other thing that can come into play, let's say 6 to 9 months from now, is the next quarterly earnings report shows a significant bump in revenue and profits, right? Or gross profits, so to speak. So those are the two ways we can try to find an opportunity to buy Roku stock and feel like we at least got a better deal than what it was selling for here in February of 2020. Now, the long-term outlook using TipRank's best performing analysts, they have it as a moderate buy. You have 6 analysts that have a buy recommendation. You got 1 hold and 1 sell. The median price estimate is $168.57, which is a 29% upside from today. Now, don't forget that this is a 12-month outlook. So what they're saying is even if you buy today, and you look out 12 months, they expect a 29% upside in that year. So bare minimum with this collection of analyst projections is you can feel good that at least Roku is trending in the right direction as far as stock price, and at least a decent chunk of the best performing analysts do still see it has an upside. The catch is, how can we maximize that upside by catching Roku at a time that the price has gone down a little bit? So now let's take a look at the awesome things that are going on in Roku. And this little excerpt is from their shareholder letter that just came out on February 13th. And they call out the 2019 highlights, and they are very good, right? So just to read them very quickly, total net revenue up 52% year over year, which is fantastic. Platform revenue up 78% year over year. This would be, of course, compared to 2018. Gross profit up 49% year over year. Average revenue per user, and this is what's really piqued my interest. Average revenue per user increased $5.19 year over year to $23.14. So the average person who gets onto Roku is worth $23.14. And for the full year, nearly 1 in 3 smart TVs sold were Roku TVs. So they're doing really, really good. 1 in 3 TVs, 33%. Obviously, that's not 33% of existing TVs in households. This is new production that they're getting in 1 out of 3. And so I think the foundation for Roku is very solid. They're doing some cool things on mobile to make the Roku app more of a entertainment app as opposed to just something that connects to your TV and changes the volumes and channels. Now, at the end of the day, it's still not a gigantic company, and there's still a lot of room for win. So on the bear side of things, every year that you go out and you don't comp these numbers, or you come in, let's say 50% of the gains you posted this year, then there's going to be a lot of people who start to poo-poo it, right? Who start to get down on the stock, and then you'll see the stock price come down. The other side of the coin is the quest for profitability. And Roku very clearly calls out here at the top of this slide that we believe investing incremental gross profit in 2020 to extend our strategic advantages best positions us for the decade ahead. So what they're saying is, in more words or less, we're not interested in profitability right here yet. And so that means for the bulk of 2020, there's going to be no PE, there's not going to be a forward PE for a long time. And so you have to understand as an investor that you are definitely in a growth stock mode. The only metrics you should really care about are these numbers of, growing inundation into the market. As long as Roku keeps it up, fine. If they start to fall back in their expansion, much like you see with Netflix, who gets micro-analyzed for how many numbers they add, and same thing with Facebook and Twitter and all these user-type platforms, if they can't keep up the pace, then there's going to be a big chop-off in stock price at some point. The bottom line for me is I like Roku. I have 3 or 4 Roku televisions in my life, including the one that's right here. And I really do think that they're onto something. The service is great. It's easy to set up. I guess the catch for me is I might be as much as a year out before I would invest in it, because I want to see more partners. I want to see more integration. Now, that being said, there is one stock play I would make on Roku, and that's a swing trade. So if you see the stock dip for whatever reason, and it goes down, to a cheaper price than we've ever seen, it might be worth buying some for the short term, knowing that this stock is so volatile right now. That 52-week range was a spread of $120. Get in low, sell it for high. But from a long-term play, I'm not sold on Roku 100% yet. Alright guys, hope you enjoyed this video. Please give me a like and subscribe if you enjoy the content. I really appreciate it. We'll see you on the next video.